Okay, good morning, everyone. Welcome to the Wednesday live stream here, joined by my friend and colleague, Alex. He is the research director. Good morning, sir. How are you?
Hello, Todd. Fine, thank you.
All right.
Usual afternoon.
It's the afternoon. What time is it in Belgrade?
It's 2:50 p.m.
2:50. Guys, welcome, and sorry for being a couple minutes late, but I think it's pretty much the standard here. We'll get rolling here. So let's see here. Let's just talk a little bit. I'll bring Alex back in here in a second. Alex has got to jump into a meeting here, so I'm going to bring him in very quickly here. What time do you have to be out of here? He's got to go meeting with some fancy corporates for some FX hedging. What time do you have to be out of here?
Yeah, I have 15 minutes.
Okay, perfect. I'll bring you back in here. Just 1 second. Okay, guys, so we have a pretty good show for you here today. We've got a little bit of volatility here in the pre-market. We actually, if you watched the free videos from last night on the Trading Analysis website, kind of lets you know that we have some sort of hedges going on here with some gold positions, some ROT positions. We'll talk about that. There's some, as I've said, it's kind of a stealth bull market going on, and kind of the new age tech, sort of the stocks that hope to become the next FANG, the next crop of FANGs. So we've got some ideas there for you. And if you're watching, be sure to hit the thumbs up button here if you wouldn't mind kind of sharing your love with the efforts here. Let me get the chat window up and make sure we say hi to everyone. Good morning. Hi, Susan. Oleg, what's up? So, can you guys see some serious bags going on? Our beautiful baby girl did not want to sleep last night, so everything just seems kind of foggy and hazy, if you know what that means. But we love her dearly. All right, so let's kind of jump in here. I'll give you a quick overview to start, and then I'm going to bring Alex in. He's got to hop out of here. Alex heads up our foreign exchange and crypto side of the business. Also helps me a whole bunch on the stock side. I've been out to Serbia twice with him for Elliott Wave kind of events and different things. A great group of traders and Elliott Wave enthusiasts out there. So really awesome to have him on board here. So, Alex, I'm going to flip over here, and I'm going to kind of let you work through with me to kind of kick off the S&Ps, kind of show them what's going on here in the broader markets, and then kind of kick it down. Do you want to hit both FX and the crypto side?
Yeah, we can show some things that we see now. I think that volatility is going to be on rise very soon, so fasten your seatbelt.
Especially with as quiet as FX has been. And
yeah.
All right, so let me just kind of top things off here, just very quickly on the index side. I'll talk about the RUT, new gold position quickly, and then we'll go into the FX, which is very much tied in, and Bitcoin is actually in a pretty unique position. So, to start, guys,
sure.
the main thing that I'm watching here is this pesky 786 retracement has been very, very key here on the less than a daily chart, right? So as you guys know, my primary count for now, I'm tracking several interpretations. I'm not going to sit here and tell you like, oh, I know the future, I know what's going to happen. I'm smart enough to know that I'm not smart enough to be able to predict the future very well. So this has been our primary account for some time here, and all the trades and pretty much everything we're doing in terms of whether we want to have a longer portfolio or shorter portfolio, more defensive based or aggressive, is all hinged upon where the S&P is going, and that's always been my upbringing as a trader. So off of the 3 hour, let's even get tighter. Let's jump down to the 1 hour. Before I do that, the implication here, if in fact this is a triangle, is that we should have a C wave decline. It's going to not be the end of the world, but it will be, pretty significant in terms of a couple, 2, 3. It's actually over 300-point decline in the S&P. So if in fact this is a triangle, this is what we're focused on here. Is this very sharp rally that we've seen in June. The rally within what I believe to be a wave has come right back into the retracement of last resort, as I call it, which is the 786 retracement. All right, so those of you who, I don't know why people do this. I don't know why some people use the 764 retracement. It's kind of a pet peeve. It's not a Fibonacci number. They take the 0.236, which is a fib ratio, they subtract it for 1, and it's 0.764. If you see anyone using that, let's just, guys, let them know that's not the right one. So what you do is you take 0.618 and you just do a little square root on it, and you get the 0.786 retracement. Square roots of phi and the inverse of phi work extremely well. Okay, so that 786 basically is what I consider to be, whether you're uncovering some kind of sort of pattern or rhythm or natural order in the market, or it happens to be the place where stop runs through the very visible 61% retracement terminate. Whether it's some kind of natural order that we've discovered in the market, or it happens to be a stop run through 618, I'll let you decide. But we have stopped at the 786 retracement of the May to June decline. We've rallied straight into it. We've backed away. In combination with that 786, we've got the May 16th high. My mom's birthday. Of course it's going to be a significant turning point in the market. So we're starting to come away here from a very, very sharp move. And we've seen some breadth deterioration. The problem here is if you compare that with the rut, the small caps, the retracement has been nowhere near as strong as a 786 retracement, right? In the rut, we've seen less than a 50% price retracement. We're up to 1537. Small caps continue to be a significant laggard in this market. So without going into too much, and I'll come back, I want to bring Alex in here in a second, but I was starting to see signs that we're getting a little bit of hesitation here in this short covering rally that we've seen in June. If you look at the bars here, it's kind of a reversal pattern. We open at the low, close up in the middle, open here, close back down to the low, and we're getting a little bit of weakness here in the market. So we did put, as I showed you in the member video last night, I put a little IW in position just to get started here, a little bit of a hedge, doing the 152, 147, put debit spread in the 21 Junes. So I'm starting to see signs of hesitation. Another trade in another market, and I'm going to segue into Alex here in just a sec, is the gold market has been massive, okay, in terms of resistance below the 1400. Alex and I went back and forth. We've been back and forth for probably 6 months to a year. I was actually arguing for lower gold, finally breaking 1,000, what exactly this triangle was. Alex has pretty much been bullish gold the whole time. I finally flipped and said, okay, Alex, I think you're right. I think this triangle is about complete. I think we've got a BD line in terms of resistance that's being threatened. I think the buy stops might start going off. Alex, how long have you been tracking this wave count? Be honest with me.
To tell you honestly, I had 3 different wave counts on gold, and I was tracking with you as a B wave triangle, and the bullish one I track for the last 6 months.
Okay, all right. Well, see, that's why I like him. He's a humble student of technicals and not too quick to take the glory. So yeah. Go ahead.
I mean, it's all the dollar story. I think gold has lost its safe haven stock relation value or shine for now.
Yeah.
So I think it's all about the dollar now.
Okay. All right. Let me just show my position, and then I'll turn it over to you for a second here. So the triangle that I just showed you that's been in place for 2+ years, I believe ended here in May. Looking at wave 1, looking at 2, a nice 5-wave move inside of 3. And then just yesterday we were kind of looking at an ABC flat, which down in A, and then when you see a kind of a 3-wave move to new highs in B, usually suggests that you're either in a triangle or a flat. We took out the lows there, likely going to be a flat. You could count that in 5 waves. And we did actually just get involved in gold on the long side here. You could buy gold longer term. I do not have it in my longer term stock portfolio. I probably will be adding it today, but I did leverage up in the options market and put a little GLD to work, again, with our option members. So I'm just showing you the positions, guys. So in the 19 Julys, we went out to next month buying the 125, selling the 128 call in the GLD. That's effectively going to take you up to the wave 5 high. So just do a little bit of channeling here. You connect the 2-4, you project off a 3. Motive Wave, the software we use, lets us very quickly with hotkeys, do a quick pre-calculated fib zone. We're looking for the green. I mean, you're looking for a move into like 1380. So not all out, but for purposes of this 195-minute chart, that's what we're looking for. But if you go out to that daily, go out to the weekly, that 2.5, 3-year triangle is significant. And what does that mean? What does that mean in terms of gold breaking out? Is it a super accommodative Fed? Could see stocks higher and gold higher. It could be a flight to safety and a risk-off kind of move. I think gold is completely lost its kind of mojo, as Alex just said. So with that being said, Alex, why don't you come on in and show us what you're doing for us in the FX market?
Yeah, sure. I'm gonna square that your view with gold, because generally euro and gold has some degree of correlation. So I think again here is a story about the Fed cutting rates, and I'm looking here for let's say a corrective pullback in a flat to 120, and then I think that the dollar will get stronger again. So by nature I'm conservative. So here we have a 5 waves down, move up in A, down in B to 127, and now I'm expecting 5 waves up to actually fulfill a flat corrective pullback in an orange wave B.
Look how choppy that price action is. Holy.
Crazy. Look.
Holy. I mean, the realized volatility in FX is like the lowest in decades. Whatever snaps this loose is FX is going to be on a tear at some point. I don't know when. Sorry, Alex, please continue. But that price action is so choppy.
Yeah, you need a kind of a special degree to decipher that. Okay, so Aussie also we are looking bullish. Exactly the same in 5 waves up. I will show you we think that this corrective process is over. We have a 5 waves up from lows. We are expecting a pullback to get long, and we expect again 5 waves up exactly as the same in euro. So basically on many charts you can see a potential 5 wave up against the dollar, which will square dollar index around 92.50.
Okay. Alex, what about the yen? And the yen is, I think, in the FX markets, the most important barometer of where risk sentiment is. If people are selling yen, global wealth managers are moving out of the safety of yen and into equities. If they're moving into the yen, it's typically a place to hide. So from dollar yen, and also if you go like against euro yen or Aussie yen, what are you seeing here?
Well, I mean, dollar yen is, as you know, based and correlated with the stock markets and with the interest rates.
Very much
as you can see, we have been in a long consolidation here. I have several counts, but I'm kind of leaning towards this one, that this is already a wave 1 and this is already a B wave triangle completed.
Okay.
So I'm waiting a pullback. I would like to put some shorts here, and then I see some risk-off events either in dollar or in stocks.
Wow. Okay. If dollar yen drops from 110 to 90, and of course you got to look at the bottom scale. Like look where he's drawn out his lines. That's January 2020, halfway through 2020. So that's next year. If that happens, stocks are going lower. I can almost guarantee that.
And that gives you gold because dollar, yen, and gold are highly correlated.
Right. No, inversely correlated, right?
Yeah, inversely, of course, but it's a very tight correlation.
Okay. Show me Aussie yen. Show me a commodity currency against a
Aussie
yen.
It's a disaster. So I will show you a clean chart. I didn't do wave count.
Okay.
Because it's really difficult.
And as he's doing this, guys, let me just say, like, I traded for a hedge fund in the 2008 credit crisis in 9. So I traded from 06 down to the lows. The yen carry unwind, the yen carry trade unwind was one of the best indicators of where the S&P futures were going, guys. I used to literally scalp. FX, dollar yen, euro yen on top of S&P futures on a 1-minute chart. That's what I'm saying. If volatility heats up, watch the yen, because FX hedge funds can get out very quickly because liquidity is so big. It starts to create a very tight correlation with index futures, stock index futures. So I'm not sitting here telling you the world is coming, but if some of our bearish counts start to come to fruition in combination with what this FX technical position is, then just definitely be aware. So go ahead, Alex.
Yeah, I mean dollar yen. I didn't do wave count because I'm
Aussie yen.
Aussie yen. Sorry.
Yeah.
So I'm waiting the break of this trend line for the formal lows, and if we see that, we're gonna go much lower in Aussie yen. So I don't have a drawn wave count on this. I will present you that next time.
Okay, no problem. How far back does the data go there?
Yeah, it doesn't go far. That's why I don't have a wave count. Yeah.
Got it. No worries. Okay, I know you got to get out of here. Alex does some consulting with some corporates for FX hedge fund or FX currency risk. So I knew he has to get out of here. Show us Bitcoin. This is interesting.
Sure. We have been all over Bitcoin for the last, as you know, almost a year. Almost the whole market was bullish here, and as you know, we kept the bearish stance. We made the lows. We missed the entries for
by
the
$40,
$60, $60, something like that. We got long here, and we exited here. And now I'm waiting this consolidation, which is probably a fourth wave triangle, to complete. So we're gonna have one more push up to 12,000 before we go in a larger correction. So we want to go long very soon until we see this C wave pullback, and then we will put some longs to catch this final green wave 5 here.
Okay, and that looks like that could happen this summer. Actually, by the way, that triangle is it's
June 30th.
Yep, and give me like a 1.618 4v2. Can you do that quickly?
Sure.
In terms of time.
That's here.
Give me 1618. Just pop 1618.
618. Okay. I have to move first away for. It's August 2019.
Okay. All right. So the break should be somewhere in the summer. Okay.
Yeah, June to end of August.
Got it. Okay. Perfect. I know you got to get out of here, Alex. That's good stuff. Thanks for that.
No problem. Yeah, I would like to stay to chat.
No worries, man.
Sure.
I'll see you in the member webinar in a little bit, okay?
Yeah, just to mention that we are following the rest of the crypto space. So many of the biggest market cap cryptos we are closely following with our accounts. So if some of your viewers wants to join us,
our viewers,
please join. Our viewers, sorry. Okay. So we do extensive coverage.
They do a great job. We got a good team of crypto and Forex side, and Forex is quiet, as we said, but watch out. All right, Alex, I'm going to boot you off, and I'll see you in about 45 minutes.
Sure.
Great work. Great work. Thanks, man.
No problem.
Okay, guys, let me just make a quick adjustment here as I multi-view. We'll get rid of Alex. And perfect. Just give me 1 sec here, guys. Position 3. Okay. Here we go. So I got a couple more trades, couple more ideas for you guys. Let me just check comments, questions. Yes, the software we're using here is MotiveWave. If you go to our website, trading analysis, we have information, we have training. It's by far the best Elliott Wave software out there. Just go to our website, tradinganalysis.com, and you can get all kinds of information right there at the partners. In terms of the brokers we use, I obviously use Thinkorswim, MotiveWave right there, and then actually I just ordered a new Falcon trading computer. Just ordered one from Scott at Falcon, so I can give you some more information there. But MotiveWave information right there if you like. Okay, Okay, guys, looking at a couple other notes I have for the show here. Let's take a look at what are futures doing here. So they're still kind of flat. I'm not doing too much here. Alex, go ahead and mute your mic if you don't mind. I don't know how to do it on this software yet. Joe, the intern, is not here, and he's going to get in trouble. One setup I do want to look at here is Apple. Kind of in line with the longer term, potentially sideways market. I just wanted to look at Apple. We've sort of lost the script, and I've talked about this last week on Fast Money, that unfortunately the headline was a little bit more aggressive than I would have preferred, which is FANG was dead. I did it on the CNBC's Fast Money, and I just was making the point that the money has not gone into FANG as much as it has kind of these second-tier tech stocks. So Facebook, Amazon, Netflix, Google. Let's just take a look at Apple. It's not one of the original FANGs, but it's certainly kind of old-school tech. So if from 2013 you have wave 1, 2, this is wave 3, which is very interesting in that the percent change in wave 1 was almost exactly equal to the percent change in wave 3, did a big drop, rallied back, and if you heard the discussion I was having with Alex, studying the time elapsed in wave 2 compared to 4, being that wave 4 is usually a little bit more drawn out, it's following a wave 3 where there's big price movement. A lot of people are kind of processing what just happened. Holy cow, Apple went from 80 to 220. Is it going up to $1.5 trillion, $2 trillion company? We set back sharply, and now we're in a period of consolidation. That huge psychological process that everyone just went through watching Apple put on those huge price moves usually sets up a longer period of consolidation than you'd expect. The baseline that we use would be wave 2, the time lapse in wave 2 compared to 4. 4 should take longer than 2. Equality in terms of time would be October of this year. If you want to go out to a 1.618 relationship, which is also very common, that'd actually be 1 year from today, June 12th, 2020. So that leaves a lot of time for Apple to do what it wants to do. If this is a valid wave count, we don't want to see any overlap in terms of moving into the territory of wave 2. That's going to be at 137.13. So I'll just throw a wave count invalidation in there. A wave got very close to that invalidation, came back here, all right? So if we are to stay above 137, if we're to consolidate anywhere from October, late 19 into middle of 2020, it kind of leaves us with this sort of pattern, which is a triangle. So I think the option strategies that we will be looking to do specifically in FANG, and I'll circle back here in a second, but if you look at Facebook, you go out, squeeze that in, I mean, the same thing, big old double top in Facebook after a long move up. Looks like we have periods of consolidation. You go to Amazon, same thing. We have a big move up, kind of going sideways. I don't like how we went up, down, up, down. We have big overlap here in this correction compared to this correction. Unless we're doing a 1-2, 1-2, and we're about to rip higher in Amazon, I kind of see this thing just going sideways. And the one strong FANG name for now is still in consolidation, but is consolidating below the highs, is Netflix. So I kind of feel like the big FANG really needs to take a break with everything that's going on with the antitrust and perhaps sort of maturity in the trends that we've seen over the last couple of years. So what I'm proposing here, guys, is we have sideways price action to go on Apple, perhaps around the 180s. So with this kind of trade, this understanding how to position with options is key. So some of the strategies that we've been doing a lot, and I'll show you a position that we just did in the next stock that I want to talk about in Disney, but in Apple, sort of the idea that you can go out and if you want to get directional, you can either buy a put to be short or buy a call to be long. If you want to kind of be a little bit more conservative, doing a call spread, buying a call, selling a higher call to be bullish, buying a put, selling a lower put to be bearish, define your reward, define your risk. That's a directional way to trade. But with Elliott wave, with the context that Elliott gives us, either you're in a trend move, either wave 1, 3, or 5, or you're in a correction, either 2 or 4, that can kind of dictate whether you want to be directional in your option trading or non-directional. So as we kind of go back here, let me just scale from a weekly down to the daily. If in fact this is C wave, okay, and we are going to continue to consolidate here, kind of like the Russell, kind of like the S&P. Remember I showed you at the beginning of the webinar that the S&P was up against the 786 retracement off the May high? Look at Apple, only at a 618 retracement. Remember Russell at the beginning of this only had a 50% retracement. So you're seeing tech lag, okay? So there's a couple ways you can play this. If you think there's going to be a leg down, fine. Let's do a ratio analysis, CNA. Equality is a certainly reasonable point of view, down to 156, sorted down into support here. But the context of the higher pattern is a triangle. I don't want to outright get bullish or get bearish and buy puts, buy put debit spreads. I would kind of like to, what I kind of affectionately call float a butterfly down around this zone in here. Something around the 180, 170. Rather than buy a put or buy a put debit spread, why not buy a put debit spread but also sell a put credit spread down into support? Right? So if the market kind of floats down into this zone, doesn't all outright sell off, but kind of a non-directional way, buying a put debit spread and financing it with a sale of a put credit spread below, reduce your costs, improve your theta, which is taking away some of the option melt. So, something down around the 175 mark looks good over the next couple months. So you could just do something like buy butterfly, buying the 175, selling the 175, supporters down around 155, so maybe put the 155 in, and then go up another 20 bucks, buying the 195. So what you're basically doing is buying a 195 at the money, selling 175, that's a put debit spread, but financing that with a sale of a put credit spread, selling another 175, buying a 155. And as you right click and analyze that trade, okay, Apple's trading around 194 right now. If you could settle down into the 170 mark, that's pretty good. It's got negative delta, meaning for every $1 move in Apple, you're going to make $15.96 in your position, but you've increased your theta. If you're long a put or long a put debit spread, you're going to be negative theta. This one, you're actually making money. You're making a little bit each day, okay? And then what you can do is kind of skew this a little bit. If you want to get a little bit more bearish on Apple, take one of your puts and make it a higher price. A higher the put, the more negative the delta. So as I go from minus 15.96, why don't we go 155 to 160? Watch what happens to the delta and the shape of our P&L graph. Now all of a sudden, we'll make more money if we go on the downside, and if Apple drops away, we won't lose anything, right? So just by shifting one of the strikes, you can actually make it a little bit more of a more bearish trade if you so choose. I just went to 165, and now we make money all the way down. The risk is you could lose more on the upside, okay, and you're taking some of your positive theta away. So you guys kind of know that's the kind of theme I'm seeing in this sort of market. I don't think it's a market to get super directional. When you are managing, again, I do manage an RIA portfolio. You know, I have longer term positions that I am holding. It's good to cut a hedge in the options market, okay? So that's just an idea for you guys, kind of context in the greater market. Let me just make sure everyone's okay with that. All right. Okay, so one more thing I want to show you. Actually, I have two things I want to show you from here. Disney. We had a pretty good Disney trade on. It's based on the blue count here. Oh, there we go. Okay. For Disney, we had, if I could just go back, I don't even mind showing you my exact account here. Account statement, show DIS, 60 days. So basically, we did this kind of trade, which is a butterfly, centered around 133 on May 9th, okay, in Disney, around 133. We did it around 133 because we kind of identified that you were likely in a wave 4. I thought the wave 4 would end. We had pretty good profits in there, up about $1,500. Kind of thought that the butterfly would work as the triangle continued, but we got a pretty good push out. It looks like Disney, despite the overall kind of market being volatile, hanging up at the highs, also ended this triangle early. So I'm contemplating the idea that Disney might be ready to continue higher out of a very shallow triangle. Point of the story is we're up pretty good money. I scratched the butterfly. We didn't lose anything. We didn't make anything. We gave the open profits back as we moved up and out. Hey, that's trading. What are you going to do? So down on the 60-minute, if in fact the triangle's complete, here's a trade that you guys can keep an eye on. If the overall market were to stabilize today, here's that triangle on the 60-minute we just talked about. We moved up. We've done an A, probably a B, and a potential C wave move down. It's got pretty good proportions in terms of C versus A and also the retracement. So the 100%, basically, this is what we like to see. A good, simple zigzag correction is down, up, down. And if you go ratio analysis, C versus A, if you could get that 100%, being that the distance traveled in A is about equal to C, that's kind of the telltale sign of a completed zigzag correction. In Disney, that's at 35.02. See that C versus A right there? Okay, so that's pretty good, and we closed right at the lows there today. We shall see. On top of that, I can hide that ABC, look at the retracement following the break from the triangle. We're down into the 50%. The 61% is down here at 34. 134.27. So altogether, we have a pretty good zone of support here in Disney. If the market stabilizes, if the futures are just kind of messing around here a little bit in the open, that's a potential support level we'll be looking to trade against. Okay? So hopefully that's helpful there. One more. And I see a nice comment. I must learn butterflies from you. Sounds good. Okay. Lulu earnings are tonight. All right, and I talked about this in the video last night. Let me just figure out how to mute Alex. Alex, can you mute your microphone if you can hear me? There we go. I got it. Okay. So with Lulu, we have earnings after the bell tonight. This is kind of interesting. If the Lulu analysis is correct, we're going up in 1, down in 2, 3, 4, and 5. I wanted to redraw this Elliott channel. If you think wave 4 is about complete, if Lulu wants to break higher following earnings, where would wave 5 come in? Wave 5 could be projected either by fib or you could do channeling, right? And the way you do that is if you're trying to find a wave 5 top, this is an Elliott wave channeling technique. If you're trying to find a wave 5 top, the way you do it is you would connect the low in 2 to the low in 4, wave 4, make a parallel and project off the top of 3, right around there. Okay, so if we are going to have a good wave 5 move, you might expect it to intersect that 2-4 channel projected from 3. I'm going to go like this. I'm just going to bring in a little bit more color to distinguish that line. Let's make it some color we haven't used. How about, I don't know, orange. Okay. Now, the other thing that I find very interesting about this chart, if in fact this is correct, is the distance traveled in 1 is actually greater than the distance traveled in 3. If you look at the fib multiple here, 3v1, we stopped at a 0.618 relationship. If this is in fact correct, we can still make a new high in wave 5, but we shouldn't go further than the distance traveled in 3. Because remember, guys, the rule is wave 3 can't be the shortest impulse wave of 1, 3, and 5. It's got to be at least longer than one other wave. So we could still break out here in Lulu. We could still go up and test this wave 2-4 channel here, but we don't want to go above the 100%, because at that point, watch what Motive Wave's going to do when I drop this label. It should yell at me here. It should give me an error sign because I just made wave 5 larger. I don't know why it's not working. Oh, because I ignored the issues. Never mind. So what I'm saying here is if this wave count's correct, we should be moving up into this zone. Maybe it's after earnings tonight. Maybe we sell off and then we go. But I kind of think it's worth a shot here. So we have trend line, resistance up here. We've got a 5v3 fib multiple right here, right around the 188 level. And what I think is interesting heading into earnings here tonight for Lulu is there's large implied volatility for tonight. We're at 130% annualized volatility for the options that expire Friday. Market maker move is $15.35, so that's what TOS is calculating as the plus and minus 1 standard deviation. If you go off of yesterday's closing price, 171.63 plus 15.35, that's an expected move of 186.98, so call it 187. That's really interesting because that's right where the technical analysis of Lulu comes in. So I kind of am interested, and I'm going to do this quick before the bell opens, and maybe I'll execute one live here with you and send the trade out with our members. They know I want to do this, so I don't mind doing one trade publicly with you guys. The other thing, before I structure this trade, I'm always thinking where I'm wrong in the wave count. Okay? And if you look at where Lulu is, and let me even go further back than a day, let me go out to a week. You know, this thing is a beast. If you look from 2009, big ABC down to potentially wave 2, I mean, even if green 2 is complete and we're in wave 3, a 61% relationship is 335. And that's long-term in Lulu. Okay, not even a quality off the lows in terms of percent change. So I might be premature in labeling this 3. We could be just continuing this wave 3 higher. So I don't want to get too presumptuous that my short-term count that a wave 5 of 3 back on the 3-hour is complete. We could be moving much higher. Okay, my technical analysis is not perfect. I'll tell you that right now. So the earnings trade, I kind of want to allow for a little bit of a higher move. So as we're opening here, let's take a look at Lulu. I did set one up for you guys already, and my members actually know about this one. It's a butterfly. It's centered around 87.5. Okay, remember, that's the expected move. It's also the middle of the Elliott wave channel and fib resistance. So buying an 82.5, selling an 87.5 call debit spread, and then financing that with the sale of an 87.5, 90 call credit spread. But these guys are only $2.50 wide. These guys are $5 wide. Okay, so by bringing the upper strike down 2.5, buying a lower call, you're bringing in more positive delta. That gives you this. If Lulu explodes through earnings, I'll still make $160. If we pin Friday at the 187.5, I'll make $397. But my max loss on this trade is $90. So I'm risking 90 to potentially make 400. And if Lulu crushes earnings, I can make 161. Right? So pretty good reward to risk ratio there. So I'll take, I generally, this is after hours, it's going to be tough to manage, in the morning. I've got, if I do a 10 lot, I've got 870 of max loss, but that would mean you have to hold this all the way to Friday. The implied volatility will come out of this thing for sure. And that's going to hurt the options that are at the money the most. But, that's kind of a fair risk that I have out there. So I'm going to put this trade out, and I'll see if I can execute this live. So we're going around 88 cents. I'm watching the mid. So I'll just go up to 89 and confirm and send. So I'm risking 890 to make $4,100. And no fill yet. Anytime I put a trade in, I come in and just kind of watch. After I put an order in, would the mid price do? It actually dropped down to 84 cents, 87 cents. I'll just give it another penny, see if I can get filled for you. If not, I should get filled here fairly quickly. Of course, it's the market just opened, so the market makers are kind of catching up from overnight orders. But that guy is still working. I'm going to adjust that with members, okay? Guys, we're going to leave it there. Let me just check comments, questions, insults. Yeah, Adam, that's for sure. Broken wings are great. There's two kinds. There's unbalanced and there's broken wing butterflies. So instead of doing 2 in the middle, 1 on the other wing, on the outer wings, you can actually sell 3 in the middle, buy 2 below, and buy 1 above. You're still long and short 3, but that's another way to kind of play with the deltas. So yeah, within the context of Elliott wave, it's great. Yeah, Lucas, SMH, a super, super strong move up. AMD is at a crazy breakout point. Intel is just eating Intel's lunch right now. AMD is trying to work a 20-year breakout. It's crazy. Richard, Elliott wave applied to scalping strategies? Not really, unless you're like 20 plus VIX and volatility is real. It's hard to detect reliable patterns on less 1 and 3 minute charts. Okay, if VIX is like 15, 12, the intraday charts are total mess and don't even try. But if things are moving, yes, you can. Guys, yeah, so their educational resources, yeah, come check us out at tradinganalysis.com. That's the site. Press that little thumbs up button if you guys appreciate that. Drop a comment, question, insult below, and we'll check that out. And again, I hope I pulled it off. Like literally my head's in a cloud from just the baby was up so much last night. So hopefully I pulled it in for you guys. no other announcements. I'm at the Benzinga conference next week on the 20th. I'm also doing Fast Money that day on the 20th, so check that out. And next week, let me just give you a sneak peek of what we'll potentially talk about next week, and also what I will discuss with my members here at the member webinar coming up in 25 minutes is the possibility that we're about to go on a massive run. Okay, a bullish count, a extremely bullish count. Okay, we'll talk about that possibility as well. I don't think it changes the fact that we have a little bit of a pullback coming, but if this wave count winds up happening, we have some serious stuff to do. All right, guys, we'll leave it there again. If you enjoy the content, if you don't mind, throw a thumbs up. Just let YouTube know you like us, and throw a comment question below, and we'll be back next week. Thanks, guys. See you soon.